Welcome to Investors Insights. Our topic today, charts you need to see. I'm excited to be joined by my distinguished colleagues who I have tremendous respect for and have done a lot of work over this past weekend as we entered Monday morning's meeting to talk about some charts and numbers that I think you will find very interesting. Bobby Norman, Trey Booth, myself, all on the Portfolio Strategies team, and we're excited to be sharing this information with you. So with that, Bobby, you talked about small businesses, the backbone of business in America.
Yeah, I want to talk about how the recently passed tax bill, known as the One Big Beautiful Bill Act, includes several provisions designed to provide significant tax relief and incentives for small businesses. And we have been getting a lot of questions the past 2 weeks about the new legislation. So I want to go over some details today. As you can see in this chart, it's important to point out that small and medium-sized business employment make up over 80% of total employment. So small businesses who employ between 1 and 49 employees make up 44% of total employment in our country. And medium-sized companies that employ between 50 and 499 employees are responsible for 38% of total employment. So taking a deeper dive into the benefits of the recently passed legislation, it's easy to see how small and medium-sized businesses, as well as the economy, will benefit. And here are a few. So the first one, the positive benefits are a permanent 20% qualified business income deduction. This deduction, previously set to expire, provides substantial tax savings for pass-through entities like sole proprietorships, partnerships, LLCs, and S-corps. Also, there is now immediate deduction of research and development expenses, which means businesses can now deduct their domestic R&D expenses in the year that they occur. That's going to improve cash flow, and that's going to, more importantly, encourage innovation. The next benefit is increased interest deductibility limits. This allows businesses to deduct more interest on their borrowings, potentially encouraging investment. And so 100% bonus depreciation for new capital investments, that actually allows businesses to write off the full cost of eligible property, such as equipment, vehicles, and software in the year that it's acquired. So that's obviously going to ease investment burdens. So it's easy to see how the new legislation can be a driver of growth for small businesses, the economy, and potentially the market. So we're still analyzing things, but so far we like what we see.
Yeah, it's exciting to see these developments because, as we've said through all the years, small business is the backbone of America business. And so it also gives them the opportunity to hire more people. And so we should see, in terms of unemployment and those kind of things, there's just a lot of opportunities there. So, Bobby, I thought that was very insightful. Thank you for all that information. And then, Trey, you tied it in to inflation because, people don't spend money as prices go up. And you've got some great insight about interest rates and markets in regards to CPI and PPI. So, and most importantly, which I definitely know we track every day, the 10-year Treasury. So talk about that.
Yeah, thanks, Greg. And thanks, Bobby, for that. Small business definitely it drives the economy. And what drives small business, I'm sure cost has a lot to do with it. And so the consumer price index and the producer price index are two inflation charts that we watch closely. You can see on this chart, we've shown this over the last few quarters. The purple line here is the consumer price index, and the orange line is the producer price index. And so the PPI, if you will, that's what producers pay. And then that eventually flows down to consumers. So those small businesses, those are their producers. That's the level that they're paying. And so we were concerned at the end of last year watching the producer price index cruise past the consumer price index, because that concerned us. The consumer prices were going to start going up. And you can see that that's kind of rolled over. And now the consumer price index has spiked higher. This will also be the first area we expect to see the impact of tariffs on inflation. The good news is imported goods, which is a part of the producer price index, were up just 0.10%. So a small uptick, but not materially impactful. So something we're watching closely here. But the more important indicator, these numbers, while they are important, it's where the market views these numbers, and especially in the 10-year Treasury rate. That's the most important interest rate in the world. A lot of interest, mortgages are priced off of it. A lot of corporate debt's priced off of it. So where did the 10-year Treasury go? So last week, the 10-year Treasury on July 14th hit a high of 4.49%, a recent high. And then now today it's down to 4.37. That doesn't sound like much of a move, but if you look at this chart here, we were right on what's a very important barrier. This chart shows the S&P 500 over the last few years, and the gray areas is when the 10-year Treasury is above 4.5%. That's a very important level according to the market. You see here, every time the 10-year Treasury is in that gray area above 4.5%, the market goes down and sideways. So very much underperformance. That tells us that that's about where the market expects interest rates to start impacting corporate bottom lines and investor sentiment. If you can lock your money up in a 10-year Treasury for over 5% instead of investing in the stock market, people may pull money out of stocks. Similarly, if corporate America has to refinance their debt at higher interest rates, that may impact earnings. So that 4.5% has become a dividing line, a sorting line on where markets are impacted. So last week's inflation data seemed a little high to us in terms of it being above the Fed's 2% goal. However, the market's telling us that it's just right because interest rates came down after it. So sometimes you want to read the data, but what's important is how does the market react to that data? And we need to keep that 10-year Treasury below that 4.5%. And for now, that seems to be the direction the market's going, which is very positive for U.S. equities. And that's the large companies.
Trey, both you and Bobby have just given outstanding explanations here. And folks, I want to say this to you as our viewers and as our clients. We watch that 10-year Treasury very closely. And just because we're sharing these charts with you today, just know that the data we're sharing today, we're looking at every day. And we are tracking this. It gives us great insight. And we want you to have numbers that you can look at as well and know that we're available to talk about it anytime, or through email, through video vlogs like this, as well as Zoom and WebEx. We want to communicate. But when they brought this information up to me this morning in our discussions, I thought that's basic understanding of what we can watch in this market and in terms of inflation and growth in business and the economy. So really appreciate it. Also, I just want to say that we're going to continue doing more of these vlogs. We're frustrated educators. You can continue tracking this kind of information with us on LinkedIn, Twitter, Facebook, YouTube, our podcast. We want to keep you updated. I've said that 10,000 times through the years of these vlogs, and I just can't emphasize it enough. And then I also just want to thank those of you that forward it to friends, family, and business colleagues. I'm constantly amazed when somebody calls in here to talk to us, and we don't know who they are, but they are a connection to you as our client and viewership. And we thank you for those introductions that you are giving us. So with that said, July 4th, we've celebrated the greatness of this country, and now we're moving forward. It's hard to believe we're over halfway through the year. We've got a lot ahead of us. We will continue to navigate, and we will keep you updated. Enjoy these hot days, few left in July as we head towards August, and we thank you for believing in us. Take care.